Dow dropped 600 points, Nasdaq enters correction after weak jobs report. Stocks experienced a sharp decline on Friday, triggered by a weaker-than-expected jobs report for July, raising concerns about a potential recession. The S&P 500 fell 1.84%, closing at 5,346.56, while the Nasdaq Composite dropped 2.43% to 16,776.16, officially entering correction territory with a decline of over 10% from its recent all-time high. The Dow Jones Industrial Average also took a hit, losing 610.71 points, or 1.51%, to finish at 39,737.26, after dipping as much as 989 points during the session. The market downturn followed the U.S. Labor Department's report showing non-farm payrolls grew by just 114,000 in July, significantly lower than the 179,000 jobs added in June, and below the 185,000 expected by economists. Additionally, the unemployment rate rose to 4.3%, its highest level since October 2021. In response to these figures, the 10-year Treasury yield dropped to its lowest point since December, as investors flocked to bonds for safety, amid concerns that the Federal Reserve may have erred by maintaining current interest rates earlier this week. Tech stocks were particularly hard hit, with Amazon plummeting 8.8% after missing revenue estimates and issuing a disappointing forecast. Intel plunged 26% following weak guidance and layoff announcements, while Nvidia slipped 1.8%, adding to a 6% loss from the previous day. The Nasdaq, now in correction territory, is down more than 10% from its peak. Meanwhile, the S&P 500 and Dow remain 5.7% and 3.9% below their respective all-time highs. According to Adam Turnquist, LPL Financial's chief technical strategist, the current pullback in tech stocks, particularly within the AI sector, is part of a natural course in a bull market that was previously overextended. Despite Friday's sell-off, Turnquist notes that this does not mark the end of the AI story. Other sectors were also affected, with bank stocks taking a hit on recession fears. Bank of America dropped 4.9%, and Wells Fargo fell 6.4%. This week has been notably volatile, with the S&P 500 experiencing swings of more than 1% during the last 3 trading sessions. While the market initially rallied on Wednesday after the Federal Reserve hinted at a potential rate cut in September, Friday's weak jobs report has led many investors to question whether the central bank should have acted sooner.